Hi everyone, welcome back to another episode of the Download with Joe. We were away last week, but we're back and pretty excited about today because we have another special guest in Ben Birnbaum. I'll let Joe, who is co-hosting as always, tears up for this one.
Yeah, Ben, well, first, thanks for being here. It's great to have you. Ben is one of the leaders at Keyframe Capital. Um, Ben, I'll let you explain a little bit more, but you've made a number of interesting investments across the smart building landscape, smart buildings plus decarbonizing buildings. Ben and I have known each other here and there for a couple of years through events. You've visited Boulder a few times for different things. But I tend to think of you as being pretty out in the market of this is what we're thinking, this is what we're doing. You've also been pretty active. So between those, good person to have on the podcast to share some of your thoughts. And I should note, Keyframe, last thing I'll say before I let you do a little intro, you don't only invest in commercial building technologies. I think your mandate, your thesis is broader than that. You've just been pretty active in that particular space too. So with that, Ben, thanks for being here. You want to give us a quick intro on yourself and on Keyframe?
Yeah, for sure. Excited to be chatting with you guys, and of course, I know both of you well over time. Joe knows all the best coffee shops in Boulder. Um, yeah, I mean, so we're an investment firm, and we target kind of medium-sized investments, call it $20 to $50 million investments. And we tend to focus our time on spaces that are impacted by energy transition. And the reason why we're that size, the reason why we have that focus um, is you have a lot of complex business models in the industries that energy transition impacts, whether it be the grid itself or EV charging or building automation and energy technology. And so I think one of the things we're going to talk about on this podcast is what happens to all these medium-sized companies. And so we kind of
Right.
focus. I can tell you how we got to this space as well, and if it's interesting.
Yeah,
But
please.
we kind of focus on medium-sized opportunities where you both need somebody who deeply understands the space and can understand kind of that stage of company.
That makes
Uh,
sense.
yeah,
And how did you get, you were noting you wanted to share a little bit about how you got to where you are as
yeah,
the firm. Yeah.
yeah, for sure. Um, so we took a pretty iterative path to get here, but first I'll say we have investments in 6 or 7 companies in this space, depending upon how you guys define
Yeah.
what smart buildings is. But we look at the intersection of the grid and energy use broadly and industry. And so for us, that we're invested in on both sides of the meter. On the
Right.
building side of the meter, we're invested in Redaptive. They
Yeah.
do retrofits of HVAC and lighting, passive logic, next gen BMS, OTI, of systems integrator,
Yeah.
Infogrid, a couple of others.
Yeah.
And on the meter side, we're invested in meter technology, data platforms like Arcadia,
Yeah.
some EV charging businesses that sell specifically into real estate. So we kind of look at that intersection and how
Yeah.
they tend to be fairly siloed. People
Yeah.
in the energy world don't always see themselves in the prop tech world. People in the prop tech world don't always see themselves in the energy world.
Yeah.
Uh, and that just understanding that translation is not something that everybody spends their time on.
Yeah.
And we try to bring that to the table.
Yeah. And that's becoming a bigger area of interest, right? Because you have buildings, controls in buildings, or just efficiency solutions, like we can tell when this building is wasting energy. You bang that up against the grid where now there are more signals, or there will be increasingly more signals to say, if you curtail your load right now, we will give you money because we don't have to turn on a power plant. I remember back in the day when Enernoc was just starting, this is probably 15, 20 years ago, you'd actually make a phone call and say, hey, can you delay the next supply, run of your assembly line 20
a fair
minutes or
amount of
an
demand
hour.
response actually still happens that way.
No, yeah, that's true. Yeah, you're right. In terms of, if you looked at, you've probably looked at this more than I. Like the overall load that is being curtailed, I would imagine that's still a large amount. But there's a lot of ways that if you have more tech in the building, it benefits the grid. I guess when you were speaking through how you see both sides, like that's a good example of, does my utility just automatically curtail? I mean, in our house, we have a smart thermostat. It will automatically just turn off for an hour. You have some limits there, right? You can cancel it. A building's more complicated, but it seems like you're kind of looking at both. Yeah.
Small buildings like homes and
Yeah.
single site retail, things like
Restaurant.
that. It's
Yeah.
you're able to have this kind of Nest thermostat level integration, like real residential and really small commercial. But
Yeah.
obviously, it's a totally different problem and a totally different kind of technology and set of solutions for larger buildings. And I think that's where my team and I have focused the most in this space. And it took us until we had made a number of investments to even understand that like prop tech was a thing that existed. We really were totally unaware of that. We were another Boulder-based company called Wonder Capital. So we're invested in Wonder Capital, and they do commercial and industrial solar. So like smaller scale solar projects, either behind the meter or in whatever setup makes sense in that state and utility. And the value proposition for commercial solar is like very clear. It doesn't interrupt operations. It lowers cost. It's kind of frictionless to do. And so we started to look at other elements, and this is how we got to this space. We started to look at other elements of a building and say, on paper, or really like in Excel, the value proposition is identical for deploying a building automation system, retrofitting an HVAC, retrofitting your lighting system. And we're naive at the time to think, oh, it's like identical. And so, there'll be the same sort of sales velocity. And then we started to learn more about it. And, inside the building, you have so much more technology, so much more integration, so much more interdependence between systems. It's not as simple as, just putting in the best technology, even if the value proposition makes a lot of sense. And that complexity, I think, has made me even more interested in the space, because there's not just like a business model solve. There's new types of technology and services that need to exist to unlock efficiency, operational and energy efficiency in buildings. And so that's what we've spent most of our time focused on, is how do you unlock that? Like, how do you lower the friction of implementing new solutions, given that the value proposition is so strong? And then, through a spectrum of from there, that's like most tech oriented, things like passive logic, to what business models are really unlocked that are high value once you have that kind of infrastructure in place. And that would be something like Redaptive.
It's interesting. So when I think of solar, and maybe you can tell me if you agree or disagree, but like when I think of solar, like a lot of buildings 10 years ago, 15 years ago did not have solar. So the idea of selling solar, I think this is kind of a summary of or kind of related to what you said. So selling them solar, it wasn't, oh, I already have some solar, is your solar better? But when it comes to like in the building, there are some new solutions. I would say energy dashboards, but you could say they're lower value compared to a lot of the other technology you can put in buildings, or they're maybe not complete enough to be high value. But if you already have, I hear it all the time. Oh, well, I'm just going to call my OEM because, man, I already have all their chillers. I already have all their controls. I'm already spending so much money with them. I'll just spend a little more. And I've heard that in a lot of different ways, but it always gets back to almost, I don't want to procure with a new solution if there's something that seems generally the same with a company that's already, in our accounting team's database.
I think that's a part of it.
Yeah. Yeah.
I also think like, you know, particularly right now, and you're one of the people that speaks most about this in the market, is like it's not that easy to integrate with those OEMs.
Yeah. It isn't.
So making a change is a really big deal,
Yeah.
and a lot of the like point solutions that you might integrate with aren't like a big enough change.
Yeah.
And so I think there's definitely inertia from incumbency and familiarity with doing business with someone, and
Yep.
probably not being rewarded for taking risk and changing.
Yep.
But I think the big thing to me is like fear of technology obsolescence, and
Yeah.
you're like, if I change this in 18 months, am I going to have to change it again? And right now it's going to take me a year to even implement.
Right.
And so I think that the time that it takes to implement and the lack of flexibility once new solutions are implemented, to me, is like that's where I think focusing investment on solving those two bottlenecks, like, will massively open up the TAM.
Yeah. Well, there's when it comes to switching, I mean, I like to say there's a lot of real and perceived switching costs, and like the perceived switching costs I tend to think of as, this will probably take me a lot of time. This will probably take me retraining of my staff. And you could say like, there's not really like, you're not writing a check to say, oh, this, but you're paying your staff, and if they're spending time learning something new,
totally,
they're not.
And I mean, some of the businesses that we're invested with, but broadly in the space, like very few companies and offerings have 48-hour, I sign up and we start using the product.
Right.
It's very, very common with the way that technology is implemented in buildings today to make a decision about something and use it 3 to 9 months later, which is just like a long time. That is a long time.
Yeah.
Fun things.
Yeah. I mean, when I was at Lucid, we saw this where we would want to integrate with existing meters in, let's say, 500 buildings. And we would say, okay, can you give us a list, like a spreadsheet of all of your buildings, your addresses, and, if you know what meter. And we would sometimes get companies that would say, yeah, I don't actually have an address list of all my 500 buildings. And it's kind of like, whoa, you don't have a central place where like where they're located. And I'm sure somebody at the organization does. It's not like that. It's just that person doesn't have access to it. And you think, well, if you're running facilities, it's the same thing you hear where some of that's like, oh, my vendor has all of that. It's like, oh, really? Like, does SAP hold all of your financial data? And like, you just like, oh, I'll call SAP. Like, no, you use their solution, but you have. So it's
if it's important enough, they have the information, of course.
Yeah, of course.
Just a signal of what's important to them.
Yeah, it's really interesting to hear how you think about the market, the journey. The one kind of specific trend a lot of us have seen in the market is, I guess you could say, the labor shortage or the ability of technology to make people more efficient. Is that something that also you have looked at or have thoughts about, of just, there's fewer people in our industry than there were 10 years ago. And the expectation is there will be fewer in 5 years, 10 years from now. Now that could change, right? A lot of reasons why you could see more people coming into our industry, but I don't know. Is that something that touches investments you make, the way you think about investments?
It's not like it hasn't been a driving force, but it's super relevant because particularly in this space, a lot of the building automation systems are not built in modern coding languages, and there haven't been training programs. Companies haven't needed to staff up a lot technically. They've had kind of lifers that know how to implement these things. On service providers and seemingly on the real estate side of things, and you both probably know this so much better than me. So I think we occasionally see like, this is our person that, like, a lot of key person risk. Like, this is our person who knows this. We need to
this is our Siemens guy. This is our JCI guy. Yeah.
So I think we see that often. I don't know. Like, I don't know that the space is like unattractive to bring in, new college grads and young and talented people.
Yeah.
Like, I actually see people all the time who find the space,
Yeah, that's a good point.
really interesting.
Yeah.
It's becoming
But
more interesting.
there is that kind of changeover of, we're not going to use those dying coding languages. We're going to use modern technologies. And so I think like people are going to ride off into the sunset with some of that knowledge, and we're just going to have to rip it out.
Yeah. No, it's an interesting point. I mean, there's like the big picture. I know even in our small town of Boulder, there's a huge like technical education center, and my wife's a teacher, and she was telling me that she's like, there are kids who go and take a lot of college credit. So they'd be like some type of medical professional, electrician. It's like they get the college credit if they want it, but if not, they'll just get hired right out of it. And she was like, you know how much money some of these kids can make? I'm like, yeah, I know. You could just be an electrician and you make a really good salary. I mean, that's one example that's oftentimes pointed to. So I think it's sometimes just not recognized, like, oh, there's actually really good jobs here. And I think that's a good thing for our industry. I mean, that's kind of off course than what we want to talk about, but it's
I don't disagree.
Yeah. So, I guess, one thing I get questions sometimes, or the same question from different people, of like, where are we in the adoption cycle around building, next generation building technology? And that's kind of a loaded phrase, but the idea of, I talked to a university yesterday who was saying, we still have a lot of buildings with pneumatics. Pneumatics are basically pressurized air that is opening. So the thermostat has the ability to let some pressurized air, and that will actually open up ductwork in a very high level, simple way. So like not direct digital, right? There's no data flowing between a thermostat. But in terms of like, in some of this was a university like over 100 years old. So the point was, well, the building is 100 years old. There's a lot of complexity. But where do you see where we are around the adoption cycle of the companies you're investing in, their peers? Are we early? Are we late? Are we in the middle? And there's a lot, innings, quarters, whatever sports analogy you want to use.
Yeah. So it's a gigantic industry with many different sub-segments of things that are sold into it. Obviously, we're very late in the adoption cycle for HVAC systems, for example.
Yeah.
But
yes.
If we're narrowly talking about, technology that allows data to flow, seamlessly across systems, and the offerings that unlocks, whether it be the retrofit type of business or the grid interactivity type of business, I personally feel like we haven't really even started. I think we're like playing around in the sandbox, and people are testing out different kinds of solutions. A lot of those solutions are truly pilots of different types of integrations to show what a value proposition can be, far more than there are technology that's built to scale. And so I feel like we're kind of nowhere yet. Go ahead.
Sorry, would you say, obviously, if you think about your portfolio at Keyframe, you could argue that it's all fairly similar spaces or different pockets, but we're obviously talking right here now about building operations. But when you think about David Energy or one of the previous investments you made, Arcadia, are they also facing the same challenges when it comes to like the adoption cycle, or is one space slightly further ahead than the other?
Well, those are super different businesses, but like I would say things are consistent with what I just said. And so I'm not sure I would call them challenges. But I think there's like, I'll separate the space into two things that I see. I see, folks who have built an offering, but haven't built a technology or a business model that's like specifically designed for scale. And I'll point to fault detection as a category where that is the case. the value proposition is clear.
Yep.
Most people who have some level of understanding of the space can go to a building and find inefficiencies in it because there's so much low hanging fruit.
Yeah.
And so we've seen, there are obviously incredibly sophisticated ways to do that. And then there are also unsophisticated ways to do that, like adjust the set points properly.
All right. Bring somebody in for a day. Yeah.
Yeah. And so I think we've seen a lot of businesses that are like, wow, there's so much low hanging fruit. Let me go solve customer solutions, provide value instantly, not necessarily give thought to, there's no natural buyer for that. Like as you were kind of saying before, there are not established sales channels for that sort of thing. There's no real standard for how to deploy solutions. So you see a lot of custom deployments. You see a lot of hardware plus software models where people are bringing their own hardware in to do some level of sub-metering, or like, jerry rigging a system to control one portion of it. And, none of those things are designed to scale. And so for businesses that haven't thought about, either from a technology perspective, a go-to-market, or or like an integration deployment perspective, how to scale, their sales cycles are long, and that's what I would expect them to be. And I would put like Redaptive in that category today, because they don't have like a natural place to sell into in a building.
Yep.
And even like an Infogrid, and we owned Aquacore before it was owned by Infogrid. Like similarly, it's like different customers have different needs. There's different levels of technology integration in each building. And so I think like there's a category of company in this space that was a popular business to build between 2017 and 2021, that there's so much low hanging fruit. A lot of great problems were solved, but not a lot of business opportunity was ever going to exist there because of the things that I just.
Well,
then I think there's like,
go ahead.
Then I think there's like tech, that is that I actually see great scalability in the businesses that exist today, and we're not invested in all of them, but like you see a number of different businesses around independent data layers in buildings, and they're selling something different and enabling success of other services. And so I see like a lot more inertia, a lot lower sales cycle around those things. And in building controls, there's established channels, a lot of service providers, replacement cycle already for buildings. They like plan on replacing these things. And so
Rick LeBlanc, who he's been on the podcast once and is very, very active on LinkedIn. I mean, you just talk about the channel from I'm the OEM, I make a controller, a field controller, to this is being put in your building. There's a lot of steps there, or not a lot, but there's multiple steps, let's say. So disrupting all of that is much harder than, to your point. What you're getting at is another topic that we wanted to bring up, is just there's a lot of fragmentation. And would you say the fragmentation is that 2017 to 20, a couple years ago period, you saw a lot of companies, I would say they weren't always the same company, but the value proposition from my eyes was very similar. We'll help you identify inefficiency and save energy.
Yeah.
So is that HVAC focused? Is that lighting focused? Is that sending somebody? Is that automatically controlling the building? I think if I'm the chief engineer of a building, I might not care. It might just be, I pay you money, I get, better operating environment or better comfort in the environment. I get lower energy costs. I get longer life of equipment. Great. Give you money, get some savings back. But a lot of different ways to do that. I don't know. On the fragmentation point, though, I would imagine you see the same thing. There's just a lot of companies in this space. and a lot of them really haven't scaled, as they would have expected.
Yeah, no, I think a lot of companies started in the way that I described. The three of us could go to a building and we could probably create some value, and then we could go to the next building and we could build a book of those.
Yeah.
So I think there are a ton of companies because it's a problem worth solving, and so it attracts interested entrepreneurs.
Yeah.
I don't know if there was a question about that, but
no. It was more just kind of like building on the discussion point. I mean, so here's maybe, I don't know, Luz, do you have anything you want to ask? I had kind of a wrap up question, just looking at time and wanting to keep this.
Yeah, I mean, when you think about fragmentation and just integration between OT and IT systems, do you see the big OEMs who some could argue, and I appreciate we don't necessarily want to throw them under the bus, the big OEMs, but some could argue that they are holding the industry. If we're talking about building automation and smart buildings, they are stopping us from being able to actually make a serious dent in most of these missions that these businesses are having. Do you see those big OEMs changing and potentially building products which are more open, or acquiring products which are market leaders versus what they have done in the past? Or do you see startups still continuing to have to find a way around working with those businesses who, let's say, have closed products?
I mean, I can't think of a reason why they should change. I don't know if you guys can.
Well, they make. I think that's my thought process as well. There's too much money being made doing what they're doing right now. So
they're really strong businesses. They have a lot of customer stickiness.
Customer affinity too, right? There's both I have to use this because everything else in my building is using this, and I really like my friends at this. I mean, you see that at distributors, you see that at the OEMs, you see it at kind of every, the integrators, especially.
I don't know why they would cannibalize themselves. So, I think that's something that companies in the space should appreciate. I, of course, think if their customers are asking for different things, they are going to think about, how do I deliver those things to my customers? So that they continue to grow. I think every company wants to have more software revenue because it's high margin, makes your product even stickier. So I think they'll probably invest in that more in the next decade than they did in the last couple of decades. But if I were them, I wouldn't change.
Yeah. I mean, adding to that, from my point of view, they definitely want to tell the story to the. So one, Siemens, I think their financials for the last quarter were 2 weeks ago, and they were a pretty strong quarter Siemens obviously has a lot of different businesses, but within, I forgot what they call it, but I think smart, they don't call it smart buildings, but they have smart infrastructure, I think is what controls falls under. Anyway, very strong all in all quarter. So they're clearly doing well, to your point. You look at the stock prices of some of the HVAC companies, Trane and Carrier, I think in particular, Trane in particular, very, very strong performance over the past year or two. JCI had a bit of a bump when they spun out, kind of the light commercial and resi business to Bosch. So to your point, they're good businesses. I think you still see them. My thoughts are, one, they want to tell the story that we are investing in technology. So buying larger, there were a bunch of software businesses, FM Systems, Nuvolo, Brightly, all got bought. Planon, not completely bought, but 90% bought by Schneider. I think part of that is we just want to tell that story. Siemens, even if you go back 3 or 4 years ago, I think their CEO, it might have been a different CEO at the time, said, we're going to increase recurring revenue significantly. And that was across the entire business. You say, okay, well, maybe you're just buying some larger businesses that just give you that goal, right? We're at that point, and they generally are close enough to what you already do. But I think the labor shortage touches them. I think as you get down into the channel, there is more disruption. But I think that's not a severe threat to their business, because you look at all the integrators and sometimes the distributors being rolled up. Those businesses might just be sold to the JCIs and the Siemens and the Schneiders of the world in 3 or 5 years, and you're kind of back to we control everything.
To their businesses, but I think they're gonna try their darndest to,
Yeah.
beat them or buy them. And they seem to be pretty well run
Yeah.
businesses. It's not every space that, looks up at the incumbents and says, even though they want to figure out ways to implement new technology and whatever else, it looks up at the JCIs of the world and Siemens and Schneiders and Honeywells and are like,
Yeah.
these are good businesses that sell good products.
Yeah.
And so there may be ways to do things better, but there are industries where people hate the incumbents because they think that they're not treating customers well, or they play dirty or whatever. Like, I don't know. I think there's a lot of problems to be solved in this space. The way I think they get threatened most is like deep technology investments in controls, and whether or not they can keep up with that, given it's been 25 years since Honeywell bought Tritium, and I think it's pretty well understood that they haven't done a lot to have like next gen architecture, and neither has anyone else.
Though you're right. Though Tritium, bought in like 2005 or 2006, Tritium has grown a lot. It's interesting. It's like almost like just holding on to the business.
Yeah.
It's grown a lot, and now every OEM has a Tritium
to their benefit
product.
To not.
Exactly. It's almost like proving the fact, like, don't innovate, just give it some money to let it like grow as like a normal plant. Yeah,
but we are in a new. I think probably everyone who watches your podcast agrees that like controls are the layer that hold this whole thing together and hold their competitive advantage in place. At least that's my opinion. And that's a part of the industry where like a startup can build technology that's meaningfully different from what they offer. So
do you have time for one more question, or do you want to?
Yeah, sure.
Yeah, I was going to say, so we talked about this in the prep, but so I get calls sometimes. I work with some investors, I work with some startups, I kind of across the board, but I get calls from sometimes usually private equity or larger, maybe growth equity, private equity, who say, hey, interested in doing a roll up in this space. Can we talk to you for a couple hours? Can we just talk through our thesis? And and I've heard that plenty of times. Oftentimes after even a couple hours of talking, the feedback I typically is, oh, this is not nearly as interesting as we thought. And I'm not picking on anyone specifically. I think it's just, if you don't know the space really well, it looks attractive. If you start digging in, it doesn't look as attractive. I don't know. You've probably seen this as well. What's your take on that those circumstances or that type of, we're looking at this, we get really hot, we get pretty cold pretty quickly.
I think it goes back to what I was kind of saying earlier about the barbell nature of the space, and like how many companies have been able to build, $2 to $10 million revenue businesses off of just being pretty customized from building to building without having to build foundations, like technology or something that's scalable. And I think what this space has for it is solutions are absurdly sticky. Don't seem to need to provide amazing service for people to want to use the product and not cancel you. And so I think there's good merits for stacking that on top of each other. But I think you need strong, like you need synergies for an actual roll up to be able to work. And if everything is as very customized at companies, I think it's difficult to get those synergies. So I don't think we're going to see a bunch of, you guys know the company list better than me, but a bunch of companies that don't feel like they have a true independent data layer or something that, is unique to the space that you can get the synergies out of a business, the cost out of a business. I don't think we're going to see roll-ups happen. The roll-ups that we will see happen will be done by the companies that either have what I just described or have something like way, way higher value to sell. And that's more like, a retrofitter buying a fault detection company because they can sell 100x the amount of value through one customer, or or a bunch of the incumbents buying the types of businesses that you described we were talking about earlier, because high value to sell. So that's where I kind of see it falling apart. But I still see interest in, can I get the data layer? And if I can get the data layer, can I place offerings that don't have strong technology on top of it, remove the customization, keep the revenue? And that's the thing that I actually do think will happen. Sorry, someone's knocking at my door. 18 months.
This makes sense.
Well,
that's cool. Go ahead.
Well, let's just wrap this up, Ben. I appreciate we've gone over. So thank you again for your time. That's been great. I don't think there's anything else to discuss.
People, you're pretty active on LinkedIn. Probably I'm mostly on just LinkedIn, but so people can find you there. Any other points to make on just if people enjoyed this and want to learn more from you, where do they find you? LinkedIn, best place, or?
Yeah, that's great. I find myself pretty accessible, so I love it.
You are pretty accessible. Yeah. Cool. All right. Well, thanks again, Ben.
All right. Thank you, guys. Good to see you.
Yeah. See you. Bye.